topics today is source document. What is source document? Okay, source document is a specially designed form which supplies details of a business transaction. It contains information like the date, the nature and types of transaction, the value of the transaction, and the name of the buyers and sellers involved. Source documents are important as evidence of transaction, for recording transaction, and for auditing purpose. Okay, the first one is purchase order. A purchase order, or known as PO, is an official document issued by a buyer committing to pay the seller for the sale of specific products or service to be delivered in the future. When accepted by the seller, it becomes contract binding on both parties. The second one is delivery order. What is delivery order? Okay, delivery order is a document from the consignee, shipper or owner of freight ordering a terminal operator, carrier or warehouseman to deliver freight to another party. Delivery order should be clearly distinguished from bill of lading. The delivery order is not a negotiable document, nor does it evidence receipt for goods, nor does contain the provisions of the transport contract under which the goods. The third one is invoice. What is invoice? Invoice is a commercial document that intimates and records a transaction between a buyer and a seller. If goods or service were purchased on credit, the invoice usually specifies the terms of the deal and provides information on the available methods of payment. Types of invoice may include a receipt, a bill of sale, debit note, or sales. Okay, the last one is good receipt note. What is good receipt note? Good receipt note is a note or receipt used by the customer to check or validate the delivered goods. It is a verification note filled out by the customer at his end. To some extent, good receipt note is a type of pay order before the order confirmation is sent. Good receipt note is a record of goods from the customer that he has received from the vendor.
Me, I will continue with source document number 5, which is debit note. Debit note is a document used by a vendor to inform the buyer of current debt obligations, or a document created by a buyer when returning goods received on credit. The debit note can provide information regarding an upcoming invoice or may serve as a reminder for funds currently due. Number 6 is credit note. Credit note is issued in various situations to correct a mistake, such as when an invoice amount is overstated, correct discount rate is applied, goods fall within guarantee period, or they do not meet the buyer's specifications and are returned. It is also called as credit memo. I will proceed with number 7. Number 7 is payment voucher. Payment voucher is a document which can be used as proof that a monetary transaction has occurred between two parties in business. A payment voucher can be used for a variety of purposes, sometimes taking the place of cash in a transaction, acting as a receipt, or indicating that an invoice has been approved for payment. Lastly is invoice. Invoice is a commercial document issued by a seller to a buyer relating to a sale transaction and indicating the products, quantities, and agreed prices for product or service the seller had been provided the buyer.
The book of prime entry consists 7 types of journals, which is general journal, purchases journal, sales journals, return inwards journal, return outwards journal, cash receipts journals, and cash payments journal. First one is general journal. The function of general journal is to record all the following that do not belong in any special journal, such as purchases, sales, cash receipt, and cash payments journal. Is an example of general journal. General journal consists date, details, folio, debit, and credit. Is the cash receipts journal. The function of cash receipt journal is to record all cash received from any sources. The most common are the receipts, and the cash register summary. This is an example of cash receipts journal. It consists that receipt number, details, folio, bank, discount, allow, accounts receivable, sales, and other accounts. Next is the cash payments journal. The function of cash payments journal is to record all outflow of cash from the business for any purpose, such as payment vouchers and check bounce. This is an example of cash payments journal. It consists date, check number, details, folio, bank, discount received, account payable, purchases, and other accounts.
We will continue journal number 2, which is purchases journal. A purchases journal is a record of all acquisition made on credit during a period. In other words, this is a journal that keeps track of the other plates using vendor credit or account payable, as well as the current balance owed to each vendor. The next is sales journal. A sales journal is a specialized accounting journal, and it is also a prime entry book used in an accounting system to keep track of the sale of items that customers have purchased on account by charging a receivable on the debit side. The third is return outwards journal. Return outwards journal refer to the goods returned by an organization to its suppliers. They are goods which were purchased from suppliers. However, because of being unsatisfactory or a different reason were returned back to the suppliers. They are also called purchase returns. For example, supplier's account is a side debit, while to return outwards the account is a side credit. Point is return inwards journal. Return inwards refer to the goods returned to an organization by its customer. They are goods which were sold, but usually because of being unsatisfactory were returned back by the customer. They are called the sale return. For example, return inwards account is a side debit, while to customer is a side credit.
Continue with ledger. A ledger book is a book, set of loose cards or files that contain accounts. Of ledger are purchases ledger, sales ledger, and general ledger. A book containing accounts in which the classified and summarized information from the journal is posted as debit and credit. It is also called second book of entry. Okay. Purchases or account payable ledger. The sales ledger is your record of sales and whether or not you have received the money and how much you are still owed. On the balance sheet, the total amount still owed to you by customer will usually be called trade debtor or account receivable. The sales ledger has an account for every customer. Okay, the last one is general ledger. General ledger account or ERP. The general ledger works as a central repository for accounting data transfer from all sub-ledger or modulars like account payable, account receivable, cash management, fixed assets, purchasing, and project.